next one is complete the table showing the corrected profit after the corrections of all the errors made. So here let's transfer all of the corrections to the corrected profit. So here one of the ways is, if you have done this portion correctly, you can just transfer here to the profit in the opposite side, so that you can correct easily. Okay, so that this gets corrected easily. For example, here the purchases is going to appear on the debit side. Anyway, you're going to transfer it to the income statement, so it can appear on the decrease credit side. Okay, so here purchases, it is going to appear as 5400. Okay, so for this method which you are going to follow for the corrected profit, you can just, if for that your journal entries have to be correct, then you can directly transfer. Otherwise you will have to think about how is it going to affect the profit. Okay, then this drawings. Okay, so next we have the drawings and general expenses. Drawings is not going to appear in the income statement. General expenses is going to appear. So it is 1560. So 1560. Okay, because of that error they are telling, you can write even general expenses here. So the general expenses here, it is actually credit. When you are transferring it to the income statement, it will become debit. Then for the commission receivable, this had appeared. Okay, this is good, this is the thing, this we have to transfer it to the income statement. It's appearing on the credit side, so you will transfer it to the debit side. Then you have depreciation. Okay, depreciation is an expense. Okay, this depreciation I can transfer it to the income statement on this side. Okay, because this is actually showing how it is going to be entered. Okay, on the credit side. So it's 250, it is going to become income. Then allowance for irrecoverable debt. Okay, this had appeared in the income statement. It should appear on the this. I have to transfer it to this one. So it is going to, allowance for irrecoverable debt had become income. So it is going to appear. I will have to, it 650, it will increase the profit, so you transfer it here. Okay, now let's calculate, because this is going to act as an income or an expense. You can also check by saying this allowance, okay, has decreased. The decrease in allowance is going to become an income, right? It is going to appear as an other income. Then this depreciation, this is increase in depreciation, so this is going to expense. Okay, this increase in expense. So you should be able to understand even that. So this is an increase in expense, this is an increase in income. Okay, and this one, commission receivable. Okay, commission receivable, we can say that it is an increase in income. And this payment, this is general expenses, is going to get reduced because we are going to remove that. So which means there will be an increase in income. Okay, you had to say this one is then purchases. Okay, purchases is an increase in income here, expense, so it is going to appear on the debit side. So this is how you can identify whether you have done it correctly or not. Okay, and then let's add up all of this. So 1560 plus 750 plus 650, the value is going to be equal to 2960. So this value is going to be equal to 2960. And this value, let's add up 5400 plus 250, it is 5650. Okay, 5650. Now let's add the increase and decrease. So we can see that there is a difference of decrease is more. So the decrease value is going to be equal to 5650 minus 2960. So 2690. Okay, so 2690 is the decrease. So the overall decrease is going to be from 19,000, it will become 16,310. Then we have evaluate the use of International Accounting Standard IAS when preparing financial statements. So whenever you're preparing IAS, okay, what happens is it is a common standard, right? It is a common standard, accounting standard, which is followed across the world, and it will help you to calculate the accurate profit calculation of revenue and expenses using those concepts, and it becomes more reliable for the users because everybody has prepared using the common concept. And so comparability also increases because it's a consistent concept applied across all preparation of financial statements. However, we can see that these are used only by corporate bodies. Some small businesses might not follow this, and also there is a is you require some skilled accountant staff to prepare all of this. And so because it is certain concepts are open to interpretation, and a skilled accountant will be able to tell best accounting techniques to be followed. And also it doesn't consider non-financial factors such as sustainability, the location or the brand reputation of the business, or the people employee skills. So these are the negatives points for not for when you're following IAS. So in conclusion, you can say it is better to follow this common standard practice of IAS across the world so that the financial statements of the business can be compared